Hello traders, how are you? Vladimir Ribakov here from Traders Academy Club. Welcome to the weekly Forex forecast for the week starting of 14 to 19 of July 2019. Happy summertime to everyone, and I hope you will enjoy your holidays, vacations, sun, vitamin D, and some great quality time. So this is the weekly Forex forecast as mentioned before, and before we start, few notes and updates. So first of all, on Monday I will be publishing, as every week, this text format for the forecast. So just come back to the blog vladimirribakov.com or come back to the video, and in the description you would be able to find the link to this text format. The text format is the summary of what we will discuss now in the forecast. Okay, so you will be able to scroll down and see that in a written version format, so you can always come back, refer to that, and see the ideas. So we will review the trades we discussed about, the ideas we discussed about previous week, see what worked, what failed, what has to be updated, and we will discuss about several new opportunities that we have on the list. This week I still record without the camera, trying to fix the one that makes me issues right now. So let's begin. Our first pair we have been hunting was the euro versus the pound. The idea we are looking at as critical idea is the the euro pound 0.90 0.91. That's where we would expecting the sell. So we wanted to see triple higher, lower highs and lower lows, retraces, and looking for sell opportunities, trendline breakout and lower lows to start looking for the sell opportunities, or slow climb and then lower lows. So let's take a look on the euro pound, see what happened with this one. So we don't have the structure of 3 lower highs, lower lows yet. We do not have the trendline breakout yet. We do, however, here on this small zone have some kind of convergence idea. Is that good enough to make it start looking for the sells? The answer is yes. The zone from the daily chart is yet critical. It might spike and play around. That could happen. 0.90 to 0.91 is the critical zone, but I do expect the pair to start and provide us the correction to the downside. Again, we would want to see, of course, the longer movements and some impulsive move to the downside, so it can make it legal for continuation. But again, the way it looks right now, the pair is under bearish structure. We also have a bearish hidden divergence on the weekly time frame. The MACD slows down. The candle is yet bullish, so careful approach with this one. You want to get it clear signs, and if you get yourself involved before we get official trend breakout and swing lows creating to the downside, lower highs, lower lows creating to the downside, be careful and keep lower risk. This is the bottom line in such conditions. We do not want to force the market. We cannot force, maybe we won't, but we cannot force the market to do something it's not ready to do. Next one is the euro versus the Kiwi. We discussed about the previous week cash out opportunities around the zone it has reached for us. That was a very good place for cash out, expecting some kind of retraces and maybe then sell continuation. But let's take a look what happened since. So first of all, the cash out would turn to be a good idea, right? We got this level very close to the psychological 167.50, classical bend to bend movement, bullish hidden divergence in play, and voila. So the biggest question is what's next. For next, there are several not clear conditions right now. This is, from my point of view, triple cycle, so that would best to be double wave or at least dance in sort of a range before further continuation up. At that moment, due to the price action and the fact that we enjoyed our move down, we have been following for several weeks, at that moment going neutral, we'll be scanning for better opportunities for the longer run. Next one was the Kiwi versus the Canadian, expecting two waves from the daily chart. And the way we wanted to see that was the 4-hour chart bearish divergence, move down, and then looking for setups for another rally before we switch for long-term sales. Now, the way that the New Zealand and Canadian worked, it's officially made a move down, but never managed to provide us the buy opportunities. So we never got two waves and breakout. We never got a range and breakout to the upside. And basically what happens since, we are going straight down since. So the idea of looking for buys here that would look very interesting from previous week at that moment becomes irrelevant, and basically on this pair, again, for the longer run, it's still neutral. The reason for that is it's best to go for the weekly or monthly cycles direction when daily provides us the real opportunity for it. This is not a bearish divergence, and the fact that the last divergence here is still bullish, so that might be just an empty spike before deeper correction. And this is the reason why currently for me it's a neutral condition for the longer term. It's not clear, not chasing the market, waiting for the next opportunity. Next one on the list was the pound versus the Aussie, with its level of 61.8 expansion, where we expected sort of a retrace. We are there right now, so basically this is still in play for us. We expect some sort of a retrace here, which further on for the sells. So short-term rallies are more than welcome, but I do think we would have this pair moving lower. So sell the rallies was and will remain the plan for this one. New Zealandian dollar was split in two. First of all, we'll be getting here this divergence, see some retrace, reversals, and then after the reversals would be looking for further buys. So let's see what happened with the New Zealandian dollar. We got the first scenario as we want, two waves down, and again we want to see two waves down, but look where the trend line goes. This is too sharp trend line, not clear, and too far for a breakout. What do I mean by that? Imagine it breaks here, the protection at that time would be enormous. So you do want to get clearer scenario, and we don't have clearer scenario, and the fact is that the last daily is slowing down with these two waves, not clear, not obvious, going neutral on this one as well. You would see that several pairs simply go neutral this week in their longer term view. One of the reasons that it happened is last Friday, the non-farm payrolls report, which turned to be proving great numbers, and the fact is that at that moment the majority of analysts dropped their expectations from the Fed to go and actually cut the rates as they expect in July. So what happens this week is we have on Wednesday, very critical day, we have the Federal Chairman Powell to testify. Then we have the FOMC meeting minutes to be published. This is going to be critical. Then also we have a speech from Powell in Tuesday. Again, very, very, very important day. Now, Thursday, the CPI expectations that will probably give the final decision. Will the Fed actually go to cut the rates as Trump wants and as the market expect? or not. But the most recent reaction we saw from this report on Friday is a strength from the dollar, which basically changes the direction the wind blows, because the market was representing the expectations from the Fed to cut the rates. And right now, with these numbers, boom, the wind blows in the opposite direction, and the analysts expect to see and to hear some clearer words from the Fed. That's likely to happen this week. So that's why New Zealand dollar is moving to neutral right now. Daily and 4-hour do not provide at that moment any buy opportunities. Why would we force things to happen? We don't. Now, one of the interesting things we had on our view was the reversals to the downside to hit it in this period of time, 4-6, according to the statistics. Now look, where's our New Zealand in here? Look how beautifully it worked out. 4th of July, right here, the top, creating, and we hit it to the downside. So that's the first part. As we expected, the reversal to the downside worked and happened. Now we're looking for buy opportunities, which at that moment I would be careful with them. They do not provide any good two waves and classical divergence and any signs of potential breakout. Right now, as mentioned already, this trend line is far away, so it's not a worthy trade to watch. That's why at that moment, going neutral is the very smart thing to do in such situation. So I would now like to take 20 seconds of your time. If you are new to the channel, I would like to invite you to subscribe to the channel. Just remember to allow the notifications ring bell. Leave your comment in the comment section. Share the video with anyone who you believe can enjoy from the forecast and the trading ideas we share. Join our free Telegram channel, and to do so, just follow the link below in the comment section or in the description. And I would like to invite you to join my live trading rooms on daily basis in Traders Academy Club. To do so, just follow the links in the description. Right now we continue to the euro versus the dollar. According to the weekly cycles, 116 was the area we were hunting it, and we were looking to trade it in two waves, or break off this range, or two waves and breakouts for possible buys. Now let's take a look what happened on the euro. The range never broke up. The two waves, that was basically the way it was developing, and since then anything like that. Nothing clear happened to the buy side as we wanted to see. No breakouts to the upside. Once again, our scenarios we wanted to follow were a range, breakout and continuation, or the two waves and break of the trend line for possible buys. None of that happened. No buys were offered by the euro. So the question is, what's next? And here is the next. As I just mentioned before, the Fed comes and not the Fed, the numbers of the NFP come and might change the direction the wind blows right now. Right now, look what happens. The euro created triple higher highs, higher lows. This is a structure, how bullish trend normally begins. At such moments, we normally face two waves and continuation. At that time, we have one straight retrace right to 61.8 and a blockage by Friday on 61.8 in one straight leg. Potential bullish hidden divergence remains only potential. The MACD never ticks up, and the 4-hour does not provide two clear waves. So what does that mean? That means for us, move to neutral. Annoying? Yes, but sometimes the market makes these conditions exactly. not as classical as you would wish to deal with. And that's what the euro right now provides to us for our chart. No clear two waves. It's a very impulsive, very sharp movement. No classical structure that we can work with. For example, 1, 2, clear, obvious line. Here, you can't really measure that because that's the last high, and then you never got obvious two clear waves to work with. So the best thing to do right now is to sit on the fence looking for clearer setups. So the euro dollar is another pair that this week goes to neutral at that moment before we will see what would be the signs from the fundamental that will or will not clean the table for the technical. The technical part right now is not clear. And that's why forcing that to happen would not be too smart idea. As for now. Theoretically speaking, as the weekly holds the bottom, which is here, around the 111 zone, the idea is still for the buys, and daily could still provide this or ranging correction. But again, too many questions right now with the euro dollar. Don't force things to happen. Wait for them to happen. The next one was the dollar CAD, expecting as we get to 130, cash out the sales that we have been running, and we enjoyed several good hundreds of pips here. So what happens with the dollar CAD? We got the cash out zone, we got very close to the 130, and look what happens here. Dollar CAD cleans several clearances areas, developing discontinuing divergence on this double wave. So it is also confirmed by the 4-hour chart, rounding conditions with the divergences. So personally, I think that we are now facing some zone where we could be looking for retraces to the upside. They likely to be shorter term, but I believe this is the place to start looking for the buys. And these buys could happen right from here or with a spike through another low and the rallies. But I think the way the price action goes right now, the smart thing to do is to look for bullish setup from the area surrounding the 130. Also, if you take a look on the crystal ball on the statistical table, you can see here we have several very powerful levels surrounding the 130, and we have classical time zone 7, 9, 11, strong range of bullish pressure. This is why, from my point of view, dollar CAD is around the area where we should be having some kind of bullish corrections. The next one on our list was the euro versus the Aussie, another pair that we enjoyed a great sell for a couple of weeks. According to the weekly, we still see that going further down, and this plan does not change. This pair goes and goes amazingly. Right now we are facing also a bearish convergence idea, so sell the rallies would be still our plan according to the long-term journey here. Pound versus the Canadian was on a critical area, and we were looking to find trend line breakout and then buy retraces, or lower lows, switch with false breakout and higher highs. We wanted to see a false breakout on the bottom and then higher highs. So let's take a look with what happened since. The trend line never broke. We never got any lower lows and higher highs. This pair provides nothing, and that's why at that moment, as the levels are crossed, without any setup provided, game over for this pair at that moment, going neutral without providing any buy opportunity for us. Next one was the euro versus the yen. The expectations was to get two waves from the daily chart. The way I wanted to see that is a retraces on the 4-hour chart, and then likely to continue to the upside. We wanted to see some bullish setups here. So the first move down happened, but as the euro dollar and as the New Zealandian dollar, the move down is straight forward, going through 61.8 directly, one leg, boom. Never provided any buy opportunities, any trendline breakouts, any range and breakouts, any good signs. Therefore, again, the price action becomes not clear, so the view as it originally was to get retraces and then look for buys is irrelevant at that stage. The retraces, we got them. Did we have any buy opportunity since? The answer is no. Last divergence is bearish pressure, game over for this pair. When it's not clear, it's not clear. Not going to force it. So euro yen is another pair moving to neutral. Australian dollar with the double cycle on the weekly time frame and bullish divergence. We expect to see higher highs on the daily, retraces, and buys. So let's take a look what happens on the pair. We got the retraces, we got the buys. Now we are facing a bearish divergence, which also comes in the daily. Two time frame with bearish divergence, a careful sign. Weekly divergence is still bullish, and the daily is bearish. So what do we do in that cases? Waiting for clearer signs. Clearer signs could be two waves and then continuation, or some sort of a range and then breakout and continuation. So that's exactly what we want to see. I want to see two waves and then breakout, and we can talk about the next portion of the buys. Or if we are facing a range here, then to move inside for a while and breakout of the range will provide the buys. As long as none of them happened, we should be waiting on the fence for clear buys. So I am after buys here due to the weekly cycle with the divergence, but since the weekly and the daily are not in synchronization right now, are not lined up for us, moving on the fence, waiting for the next opportunity. So the first one happened and provided. Now, waiting for the next one, looking for clear signs. The clear signs, as mentioned, are two waves and breakout, or a range and break out of it. Next one on our list was the gold. But before we discuss about the gold, I want to share several new opportunities to pay attention to. First of all, Australian versus the Franc. So what do we have on this pair? A triple cycle or double cycle, doesn't really matter how we name it, from the weekly with a bullish divergence in play. The daily time frame confirmed the last leg from the weekly to be by a cycle by itself. Beautiful divergence and a break of this trend line. So that's a good sign. Now we are facing a bend-to-bend movement. I would expect any retraces and further buy continuation. So for me, buy retraces would be a good plan to work with. The next one on the list is the Australian versus the Kiwi. Now back to the long-term view, this is a special cycle with a ranging correction, and we are on the bottom of the range, so looking for the buy opportunities. Weekly time frame provided two waves, and the first rally, this was the place where we got signs again, so we were waiting for the daily to provide good signs, and right now the daily is in increased two waves correction, basically providing this trendline breakout, so would be in a position to start and look for the buy setup. So this was also the last trendline breakout. We got this one, we got and also you can see how many times it was slowing down here. Deep slow down, and this is the place again where we can see three higher highs, attempt to create higher highs in terms of swing points. So from my point of view, retraces and buys, and this would be an invalidation area, because if it breaks, it's smart to go neutral. So I'll be looking for buy opportunities on the Aussie versus the Kiwi. And the next one is the CAD versus the Franc. Now this pair was discussed in the live trading rooms, under the idea of we got a false breakout, break above the falling trend line would provide us a bullish sign. We got a beautiful breakout here and a great rally scene. So what's next for this pair? From my point of view, according to the long-term cycle, my view is bullish. This is what I would expect. In the weekly structure, the only place where it still goes with is this false breakout, and then the most recent trendline breakout. The big trend line was not yet broken, so what happened then was the weekly was two waves to the upside, bearish divergence, so we were expecting a retrace. Now this retrace comes in play from the daily time frame, making the two waves, making the false breakout, making the trend line breaking, and higher highs structuring upside. So from my point of view, this pair is to the going up, retraces and buy opportunities is what we would be heading towards in this week, and actually the next several weeks very likely. And the last one that I would be paying attention to is the Australian versus the yen, that is facing here the first move down cycle, then two waves correction and another push. Right now a bigger view on this cycle. We can also break it this way, break it this way, of course. Now one time spike here is very tricky, makes the whole setup kind of aggressive, but also the monthly falls into this category of the bullish divergence. Therefore we'll be looking to see what the shorter term provides us, and the shorter term provides us the two waves to the downside, a bullish divergence with a false breakout, and climbing highs, rise guys, and this is the place where I love to start looking for the buys. So from my point of view, any retraces with bullish setups is for the buys, and the invalidation for this level would be, for this plan, would be this area. Do not attack without any clear setup. Clear setup is anything that could be in two waves and a breakout, or a range and a breakout. Do not just attack retraces. It's a mistake. Traders sometimes do expect me, but it looks bullish. No, wait for your setup. Don't think the market owns anything to anyone. Let things happen. Now we are to the Commodities Gold. We were after the buys there. Let's go to the idea. Retraces and rallies in ideal 1460, 1480. So we got the retraces, we got the rally, but this rally never managed to break through the barrier it has around the 1440. So what's next with the gold? Personally, I still think we are heading to the upside. That this noise is likely to get deeper to waves or some sort of a range movement, but I still would be looking for dips and further rallies. I do not think, as for now, as long as this trend line holds, second to erase that here. I don't think that as long as this trend holds, the bears should be strong. Retraces and buys, from my point of view, remain the same. Oil, the idea was to get the move down and then to see another rally. So we got the move down. Now I have my doubts about the rally, and I will explain. The way that the 4-hour chart is creating is two waves, but it is stuck within the 2 candles range. And that's something I don't like to see. I love to see clean momentums, and I don't see it here. So the oil, as for now, is a neutral thing from my point of view. And for those of you who followed my idea with the coffee for the long term, with the break of the massive trend line and the creation of the higher highs, those of you who enjoyed the rally as we discussed about that, now we see some sort of signs against divergence building up. This is a good place for cash out, or at least move stop losses to entry points in order to avoid any possible retrace against. And the dollar index, which I expected it to reach towards 38.2 to 50% from the weekly cycle, has signs against, and these signs come right here. What happens is, while weekly is a cycle that suggests a sell, that daily went into lack of synchronization by making two waves and break through that trend line. These are not acceptable signs in development of a corrective cycle. The idea we wanted to see would be 3 lower highs, lower lows with clear two waves retrace. Right now it's one retrace going through the trend line. So weekly is bearish, but daily is bullish. Lack of synchronization is a time that to move to neutral is the smart thing to do. And this is my personal view as for now, as per the dollar index. If the Federal Reserve will not give the market clear signs of the rate decisions and will let them believe that the rate would be cut on the next decisions, the dollar is expected to gain strength. And if it does, then we are heading towards much deeper rally. It's still too early to judge that, as we are still under the cycle levels, but it's important to remember this possibility. And now it's time to sit on the fence with some of the direct exposure to the dollar pairs and wait for the next wind direction to see how the fundamentals and the technicals lined up together for the longer view, because right now they are not clear, and when they are not clear, it is the time to sit on the fence and look on other opportunities such as crosses or less popular pairs than the euro dollar, pound dollar and dollar yen. Okay, so this is the forecast for the coming week. Very important week in terms of understanding how critical it is for traders to know when not to trade. Most traders are focused on when yes to trade, while the reality is that the most important part is to know when not to trade, when to adjust your view, when to ride the trends, when to go neutral, when to cash out, and when to increase. All these things are extremely critical, because it doesn't matter how well we draw the lines. It doesn't matter how impressive our knowledge is in the technical analysis world. What is the most important thing here is how we adjust our positions when required. How do we manage our risk exposure, and how well can we listen to what the market tells and not to what our heart wishes or dreams tell us. The last thing I want to share would be from crypto market. Ripple, one of the instruments I love to trade. The daily has for us a beautiful structure of rallies, highs, higher lows. Now we are facing move down to the bottom of this consolidation. This is a bullish hidden divergence pattern created for us, and the 4-hour chart provides us with a divergence by itself. We are facing higher highs here and the most recent trendline breakout. So as long as this low holds in validation, I would expect the Ripple to provide some buys. That's all for this trading week. I wish you a wonderful trading time. It was a longer forecast than on average. Again, it was critical to go over the things, to discuss about updates, to share the new ideas, and to understand how it's done properly in order to be able to deal with the changing market conditions whenever they happen. Thank you very much for your time, your attention. I wish you a wonderful trading week. Looking forward to see you in the live trading rooms in Traders Academy Club. And I'll see you in the next video. Yours, Vladimir Ribakov, Traders Academy Club. Thanks again for your time. Bye for now.